Hello, everyone, and welcome to this webinar where today we're going to be talking about trends shaping the customer experience in financial services and banking. The financial services landscape, it's rapidly evolving, and customer expectations are being shaped by seamless, instant, and digital-first experiences. So today in this webinar, we'll explore the major trends that are driving change in banking and payments, drawn from Ciklum's Banking Trends 2025, Stripe's expertise empowering frictionless financial experiences, traders' seamless trading. My name is Andy Thornley. I'm the head of regulatory affairs at Innovate Finance. Apologies for the tie today. It was an event this morning, which has driven my sartorial choice today. Innovate Finance is the independent industry body for fintech companies in the UK. And today I'm delighted to be joined by our outstanding speakers, Sam Norcross, fintech lead at Stripe, Talani Adekoya, senior UX researcher at Ciklum, and Tomas Stupnitsky, who's product director at Tradu. We've also got a number of my colleagues on the call as well who are listening in with interest and intent. So the duration of this webinar today will be 60 minutes, and speakers will be presenting their views first, and there'll be a few minutes at the end for a Q&A, so make sure that you're jotting down any questions that you want. You can share your questions in the chat, and the webinar is going to be recorded, and we can watch again at a later date if there's any interesting points that you want to know. So without further ado, let's go straight into the topic that brings us together today. And today I'd like to start with the future of top-ups and frictionless funding for financial apps. So customers expect instant, seamless account funding, and a seamless payment experience is critical within those time-sensitive moments, whether it's buying stocks, trading crypto, etc. Tomas, if I can come to you first, how important is this from your point of view? Actually, no, Sam, if I could come to you first, if that's okay. How important is this, and how do Stripe, through the work that you do, help to enhance those top-up experiences and drive engagement with customers?
Yeah, sure. Thanks for teeing it up, Andy. And I think to give a little bit of context, Stripe is a fintech in and of itself. I've got away without a tie, leaning on the tech side versus the finance side of the outfits today. And we have a large portfolio of financial services, fintech businesses that use Stripe's tools as well. One of the kind of key use cases is on topping up that balance, that wallet, such that the fintech in question can provide all the great services onto the customer down the track. That might be trading and investments, fintechs, saving, ISAs, that type of thing. What's been really interesting over the last few years is how financial services, historically the preserve of very tightly regulated traditional banking providers, have had to kind of catch up with the world of customer experience that the rest of the kind of internet economy has developed. So there's complexities that are separate and unique to fintechs, but really what we're describing in that top-up flow is an e-commerce style experience. Now, you're not going to use Klarna to top up your Revolut balance, for example. That's one of the kind of complexities. You don't want to do credit on credit. These are things that the merchant has to manage. But as a consumer, you do want to be able to use Apple Pay. You do want to be able to use open banking and benefit from top-down regulatory changes in the market in question. And so this is the bit where, as a fintech provider, you have to stay across this, because what we've seen, and so Revolut would be a good example of a customer of Stripes that operates in exactly this way. Hargreaves Lansdown, another good example too, is that having a slick customer experience is no longer a differentiator, actually. What it is table stakes. Consumers are able to move providers very easily. The kind of brand loyalty you're able to build when the services underneath the hood are more or less differentiated is tough. So how do you remove friction? Do so in a compliant way, but how do you remove friction to make it as easy as possible for them to bring money onto your platform? And this is where the kind of Stripe play is twofold. One is on that front end, do we make it really easy for you to offer alternatives and stay compliant? And on the back end, how do you test and iterate and operate in a way that's scalable? And doesn't hold you back for when innovation comes down the track. PSD3 would be a big one that everyone's going to be aware of in the next couple of months as well. So yeah, lots of moving parts in the ecosystem, and one in which that Stripe kind of sits, facilitating both sides of the equation.
Fantastic. Thanks for that, Sam. Really interesting. In terms of Ciklum, Talani, if I could come to you, What findings have you had in this space in terms of experience and the point of view from a customer's perspective?
Great. Thanks, Andy. So recently we launched an article and also an ebook on modernizing, making customer experience your competitive edge with modern banking. And the first thing is to understand your customer needs. So quant data, which I know we all love, particularly in finance, will tell you what is happening, where it's happening, and how frequently it's happening, but it will not give you the why. So it's very important to understand the why. So for example, your analytics may show that a certain payment method is most popular, but from my experience, when you speak to customers, you find things such as, it's the only payment method that works. It's the only payment method that works with a promo code, for example. So that's why it's very important to speak to your customers to get the whole picture. Another way is by observing consumer trends. So I know we're going to probably mention speed, personalization, good customer experience, as Sam has touched on. Those are now the bare minimum expectations. And this is very key for Gen Z and millennials. And if we look within the next decade, they're going to hold a majority of the purchasing power. So it's very important to understand all those needs. So understanding your particular customers, where the trends are going, what innovations are impacting that. That's how you first understand your customer needs. Second thing is modernizing your tech infrastructure to support all of these frictionless experiences. So API-driven architecture, for example, you can now do same-day account openings, and that's by open banking, which the UK, I'd say, are one of the leaders on, and within Europe in general. And also around the ID verification. So we've seen that gov.uk are launching, well, they've already launched the driving license, the passport, which is making my life easier. And if we look at the processes this affects, it's onboarding, mortgage applications. It's more seamless now. You can do it online and you're not going around having to photocopy passport or like documents, which makes it very great. And then the last thing, which everyone's probably waiting for, is around leveraging data and AI. And the reason why I say data and AI and not just AI is because AI will give you it will return whatever you give it. So rubbish in, rubbish out, as we're familiar with. So making sure that you have the right data, AI personalization, and also around the feedback loops, so data analytics. So yes, you've implemented your technologies, you've implemented good user experiences, but have that feedback loop so you can then explore new opportunities. Like I said before, Quant shows you where, so it shows you where to explore, and then you go and speak to your customers and you continue that loop, which is what we call experience engineering. Experience engineering at Ciklum, which of course is the data-driven design, technical implementation, and data feedback loop, and making sure that it's a process within your company so you have quick speed to market when you're developing products.
Yeah, Talani, thanks for that. Really interesting stuff. And actually, some of the parts that you spoke about there are parts of the what we call a UK tech stack, like AI. We won't disappear down an AI rabbit hole, hasten to add, but AI, digital ID, and of course, we've got the government's trust framework, which hopefully will be on the statute book soon. So all of this feeds into each other. To give that certainty when using data and good quality data. Thomas, if I could come to you. So when it comes to trading, for example, it's critical in time-sensitive moments that you can have confidence in that infrastructure. Can I ask, from your perspective and your customer's perspective, how important that is, and look at that through your eyes?
Absolutely. So at TradeU, we do provide customers with the possibility to trade and invest and also spend with the wallet product. The way I think at pay-ins especially is, let's start to think about why. Why customers want to fund their trading platform? Why do they want to fund the wallet? Why do they want to put money into our ecosystem? And it all starts with the need to be able to fund their trading accounts and to be able to make some money out of it. As you know, trading is very time sensitive, right? The prices of stocks and crypto and CFDs and Forex go up and down every single second. And actually meeting and making sure that we've got enough funds on the account at a specific point in time is very, very important. So here is where the entire frictionless and immediate experience come into play. We don't want to have or to give our customers experience of I order or I instruct the funding now and I'll get the money 5 days later or 5 minutes later, right? It's absolutely not acceptable because at that point in time, the customer can get a margin call, they might lose a lot of money, they might miss an opportunity, and it's not what we really want to do as a platform provider and for trading. So from my perspective, that frictionless experience is very important, but more so as well is the breadth of funding methods. These days, it's not really expected for the customer to rely only on a single funding method, right? It's not expected for the customer to always use their credit card or debit card, and that's it. Customers want to have flexibility. Customers have their money located in many different places, and they really want to have that choice in terms of right now, I want to use my credit card to fund my account. Tomorrow, I want to use open banking to fund my account. The day after, I want to use a wire transfer to be able to do that, and so on and so forth. So we are now living in the world of great choice, of unlimited options, and also we need to provide that flexibility to the customers as merchants. What is also quite important for us from the pay-in perspective is commercials, right? When we work with any partners on the merchant side, we are being charged for everything, right? For every pay, for every payout, for every single penny that goes through the system. If you think about it from the customer lens, why would we then want to charge the customer for funding? At the end of the day, they trust us already to put money into our ecosystem and then do something with that money. We don't want to penalize them for using our system. So making commercial sense of the solutions that are there, building a successful network of partnerships that provide commercial sense, but also the breadth and depth of the funding methods is super important, whilst of course staying compliant and whilst giving customers a absolutely first-in-class experience.
Fantastic. And Thomas, if I might stay with you, so obviously there's paying in terms of paying out, how important is that and having that seamless experience? I guess from a customer's perspective, that becomes, kind of probably priority number one as far as they're concerned.
Absolutely, yes. And I think when talking about pay-ins, I mentioned about the breadth of different methods available for the customers and immediacy and frictionless experience. All of that applies to payouts as well, because trading is all about getting money in, making some money trading, and then utilizing the benefits for some other purposes and reasons. So being able to defund or transfer the money out of the account is equally as important as funding from the customer point of view. So having an option to utilize, again, as many payout methods as possible, international payments, local payment methods, payout to cards, payout through open banking, push payments, pull payments, all of that is very, very important. With payouts, again, going back to the discussion we had about the commercials, it is slightly less important to or not to penalize the customers for paying out, because we want to keep the money in the ecosystem as well, and we want to make sure that customers are using us and are loyal to our platform, but still making sure that it all makes commercial sense remains the top priority. From the point of view of timeliness of the payout, again, it's not something that we want to. It's not something that we want our customers to experience, for them to wait days, hours, or even minutes for funds to reach their destination. It always must be immediate, because that's what customers are expecting. Right now, we live in immediate economy, that you can get everything basically on the click of a button or on the blink of an eye, and so we should be able to give the same services and the same value to the customers when it comes to paying out. Imagine the situation where a customer has invested a lot of money in trading, right? And they want to now defund their account because they want to, they have an emergency, right? They need to go to the hospital, they need to pay some emergency money. And we don't really want to force the customers to wait for it, right? We want to give the customer the flexibility to use faster payments in the UK, or BLIK in Poland, or IDEA in the Netherlands, or SEPA in Europe, right? And give them that choice to make sure that they can transfer out whatever they want to transfer out of the account to the destination as quickly as possible, again, while staying compliant and whilst making commercial sense out of it.
Super. And Sam, I could see you nodding along there as Thomas was talking. From Stripe's perspective, kind of what do your clients tell you? What role do you have in facilitating that?
Yeah, sure. And I think it's maybe a take that bridges the two questions, is that what the ultimate goal is to give the best possible customer experience, but the limiting factor is on how much the merchant can manage that complexity. in the having a singular solution, a point solution is dead easy, but then it maybe doesn't give the breadth of experience that you're hoping to deliver to the customer. So there is no right or definitively right or wrong answer. It's a spectrum. And I've worked with customers that have 50 or 60 different payment integrations. If you're looking very globally, that's a big challenge to manage. You might have 100+ payments team. Now, actually, the kind of consolidation work that the likes of Stripe have done to bring payment methods into a single integration is such that you can really narrow that down. And ideally, you're looking at a way to provide the different payment methods, both in and out, through as few vendors as possible. This gives essentially economies of scale. It's simpler to manage from a vendor perspective, contracting, integration-wise, and also, of course, commercials. Stripe specifically, it's not like a consumer play that we want businesses to keep money on a platform, but we do want to be as much as we can to our customers. So historically, Stripe was a one-stop shop. We said, hey, come onto the platform, we give all the payment methods, and we facilitate Visa Direct and MasterCard send, push out. We also do push out to payouts to bank accounts. And then our job was to facilitate and give innovation to our customers. So a great example, if we look more globally, is Pix. It's probably the fastest growing payment methods globally over the last 2 years in Brazil. It's been an incredible example of consumer adoption, has driven merchant behavior. A close second was actually Stripe's one-click checkout called Stripe Link. So we leverage our network of the likes of OpenAI and Airbnb that offer that payment method to consumers. So River Island would do so here in the UK as well. And ultimately, we funnel these innovations down to the consumer. What we're now starting to do is try and step back from being everything to everyone and recognize that our merchants, our fintech and financial services customers, will have really complex needs, maybe very specific commercial requirements, maybe markets that are unique. And so we're launching an orchestration offering such that you can manage the operational side of the payments you collect and disperse. You don't have to use one payment service provider for every single requirement. Things like Swift, for example, and the kind of like back-end payment methods are a little bit chunkier. You're not necessarily going to turn to a Stripe or one of our competitors for that service, but you do want to be able to see that customer data in a single place. And to Thomas's point, like it's a low margin game. And whilst you want to offer conversion to be, options to be competitive, you can't do so in a way that's loss-making for the service you're providing. So we want to recognize that Apple Pay has the best customer experience, but is more expensive than direct debit. But direct debit was built 60 years ago and is not really relevant when we're trying to think about what stable coins and crypto are going to be doing in the next 5 years if you look forward. And this is why it's really challenging for merchants to get right. And like I said, it's a spectrum. There's no one right answer. But the payout side is simply the other lens to the pay-ins. Can you give as much optionality as possible, but do so in a way that doesn't break your system and doesn't break the bank?
It's a really good message. Talani, I'm very much here for the insights that you guys have got. In the work that you've done, did you come across any areas when it comes to payouts, any differentiation or emerging trends, to use the title of this webinar?
Yes, great. It nicely ties in with Sam's point around, I guess, the speed. So one thing that is very important, particularly with a trade-off, if you can't offer that speed, is transparency. So I would say, I know we're talking about Gen Z millennials, but let me just say consumers these days, because it spans across all generations now. Everyone wants real-time notifications. You want to know when your delivery is coming. Same with payments. If you can't give it to me today, what is my expected payment date? When have you processed the payment? And of course, your bank account should also show you that, okay, it's been processed. So around the transparency, the low and no fees. So this is something I've particularly seen within consumer marketplaces. So when I used to sell on eBay ages ago and Depop, and before Vinted came along, you were charged like 15% and you're just like haggling back and forth between people that want to buy your products. But now they have shifted the fee from seller fees to buyer protection fees. And this says, again, now enhanced more listings, more business. So you have to be smart with it and balance your trade-offs, as they have mentioned. So there are innovative ways that companies can go about it by buyer protection or just things that, I know it sounds quite bad, but buyer protection fees, which of course do protect your buyers, but then also it makes you feel good as a seller, knowing that when it's your turn, you are protected as well. And yes, I think it's around the transparency, low or no fees. If sellers just have to deal with the transaction fees, that's even better. So those are the things that we're seeing around the consumer. We have talked about the instant transfers within social spending. So I think it really just depends on what is the context, and then what are the trade-offs that you can make based on those.
Fantastic. Depop, it's been a long time since I heard that, but yeah, brings back memories. We've spoken, or you guys have spoken about kind of consolidation. To talk about consolidation of data or the like, to talk about consolidation in a slightly different sense, the rise of the super app model, we're starting to see that with firms like Revolut in Southeast Asia, kind of very, very prevalent. And some fintechs are redefining financial services by consolidating all of these things, even eSIMs, into single app experiences. So, in your view, what does this mean for banks and fintechs in that race to create high value and digitally integrated experiences? Sam, if I could come to you first.
Yeah, sure. So I think this is a really exciting innovation, particularly over the last couple of years. And I think there's an open question as to whether Western markets will follow the kind of North Star of your Alipay and WeChat Pay, where consumers in APAC are able to essentially have a real one-stop shop, a genuine one-stop shop. And it differs hugely here in that if you look on the merchant side, 20 years ago, businesses would go to their banks for the vast majority of services, and then they would consume those and bundle them out to their customers. So banks is where you borrowed money, it's where you manage your entity kind of complexities, it's where you took your payment services from. Now Stripe sort of said, look, the big bet is that e-commerce is going to take off, and Patrick and John were spot on with that one, in fairness. And these next changes, as it's become increasingly more straightforward to offer digital first services to customers, is, well, how many can be bundled up into a single app? And I was looking at, just speaking with the Sam hat on versus Stripe, what financial services apps do I use? What are the ones I'm familiar with? And in the UK alone, I think the regulatory framework that we have, I think it's easy to moan about red tape. Actually, it gives security to, we have, yes, Revolut went through a lengthy banking license process, but then Monzo and Starling, and then specialists like Emma and Plum, Moneybox, the variety is fantastic. And almost all of them started out as a single solution, let's say cash ISAs to offer interest products. More often than not, they now offer basic investment services. They might offer lifetime ISAs for house purchasing. Revolut has just opened up for mortgage provisions in Lithuania. So I think that's where the direction of travel will go. I'd be interested to understand which ones are deemed to be most valuable. Like, how could you predict a channel forward? Like, is crypto, gaining enough acceptance that it's going to be something that's table stakes? Do you look into non-financial services products like insurance or telco, like the eSIMs, that give a kind of de-risked monetization opportunity to fintech apps? And really, essentially, the more complex that the product offering that you get becomes, there's a UX complexity that I know Ciklum advises customers with, like, how do you fit it all in one place? But from the financial services perspective, it's like, well, how do you make it as easy as possible to bring money onto that platform? How do you begin to segregate funds in the background to ensure that things are compliant? These then kind of bleed into your operational questions of how do you do it, which is the most important to a consumer. And yeah, I think Revolut is probably the North Star here in the breadth of services they've been forced to offer because of the slightly slower kind of path forward to banking license. But it's a really exciting kind of direction that they're traveling in that I do think others will have to move into. I bank with Monzo. I get my phone insurance with them, kind of thing. It's a no-brainer. I wouldn't look for a third party to that. But yeah, I think I have the PSP lens and a consumer lens. I don't know, Thomas, in terms of the merchant side, what do you add next? How do you categorize or give a hierarchy to that?
Yeah, so Thomas, step in and also tell us, kind of, do you think super apps can become as big in Europe as they are in Asia?
I think Asian market and European market are very different, right? In Asia, people are used to those one-stop shops where they can bank, save, get mortgages, but also order taxi, order food, get a ticket to the concert, right? Everything in a single place. I think in Europe, we are far away from there. And some, as you have said, Revolut being the North Star of that super app experience, trying to put many, many capabilities into a single place and trying to be everything for everyone. But then the question is, can you actually be everything for everyone, right? Who is your target audience? Who is your target customer? And going back to the points that Tolani and I've mentioned before, let's start with the why. Why are the customers using your product, right? What do they expect from the product? And from my perspective at TradeU, we are trading first company, right? So I can't really imagine us going into grocery shopping, right, in the future and bundling grocery into the product. But what I can imagine is trying to think about what the customers use us for and what is their lifestyle, how we can support them more. There isn't any recipe for success in here, right? There isn't a set of steps that if you do A, B, C, D in that order, you will have a fantastic super app, right? Because it all depends on the environment, it all depends on customers, it all depends on your business value and what you want to deliver to the customers. So it all boils down to really understanding your customers and really living their life, falling in love with them, with the problems, with the challenges, and trying to address them and trying to solve them. And when it comes to the progression towards super app world in Europe, it is coming, and I think it's unavoidable. And we can see that there is still a niche of specialization in Europe. So some you've mentioned M or Plum or Moneybox, they still do exist, and they still do have a value. But the question I have is, will they exist for much longer? Or will they be absorbed by the super apps like Revolut, right? And will they start forming a part of something bigger, or maybe both? I think that the both is the word we are starting to get into. But one point I wanted to make about super app experience is, if we want to create and deliver successful super app proposition for the customers, we really need to make it tailored and we really need to make it personalized. Sam, you mentioned that you use Menzo. I use Revolut quite a lot as well. And one of the frustrations I've got as a Revolut customer is Revolut is great from the capability perspective, but they are not so great in making the Revolut my Revolut, right? I'm using Revolut for certain reasons. One of the reasons is lounges, right? When I travel, and I travel a lot, I like to go to a lounge at the airport to make sure that I can have some coffee before the flight. Every single time I'm at the airport, Revolut knows about it from the localization perspective, right? But every single time I'm at the airport and open Revolut, getting to the lounges is equally as complex as it was, 3 times ago. So making sure that we can understand the customers, know who is using my product, know what I want, where I am, I think this will be the key to successful super app experience, right? So that concept of hyper-personalization and relying on data, relying on machine learning, on AI going forward, and putting whatever is most important and valuable to me at a particular place, at a particular time. I think that's what we all need to explore going forward.
Super, thanks. And Tolani, if I can come to you, I mean, in terms of the insights that you've gleaned from expectations of user experience and super apps, what's your perspective here?
Okay, I think Tomasz mentioned his first point was the most important, is understanding your market's perspective on privacy and consent. UK is very different to Southeast Asia, as he mentioned. It's a high trust society. In the UK, can you imagine telling people, we're going to give Elon Musk or Mark Zuckerberg your details and allow them to make payments when they're already being stalked with the microphone, for example? So first look at the why. Do they need that 5-in-1, or are they looking for a 3-in-1 app? Once you have the why, then you can develop on that and then deliver the frictionless experience, as we mentioned. Also, a key thing that we haven't mentioned is around inclusive design. A quarter of the UK's market have access needs, making sure that you're designing for both touch and voice, for example, making sure that we are also mindful of the digital divide and financial inclusion. So just all of these things, along with like regulations around needing to meet the WCAG, for anyone who doesn't know what that is Web Content Accessibility Guidelines, making sure that we are creating inclusive products where you do not lose market share, you do not exclude the most vulnerable, such as the elderly, those who do not have English as their first language, for example, and also around the flexible personalization. So as Thomas mentioned, so there's so much thing about AI personalization, we're going to give you this and that, but then allow users to feedback whether it works or not. So I know some e-commerce websites do this very well. I know I've hammered on about e-commerce, but they're doing quite well in terms of personalization, is saying yes or no, this is a great suggestion, or allowing people to customize their own preferences and say that actually these are the shortcuts I want to have on my app. These are the favorite payees I want. These are the companies that I expect you to give me cash back on, and etc. So these are considerations from a user experience perspective that I think we need to take in consideration with the super app, of course, starting with the why.
Yeah, in terms of that personalization point, if I stay with you, Talani, is there any indication of that trade-off or that kind of transaction that users have with their data? Do they see that as being a commodity they can monetize? They expect rewards?
Yes. So I can give an example with Monzo because I use Monzo. So I was happy to give them my details, thinking I'd get more tailored cashback. And I remember one time they sent a notification, I don't know, Sam, if you got it, saying we would like to monitor your spending habits so that we can give you the relevant cashback. And it's been probably 5% accurate so far. But one area where I've seen it perform well is with the credit agencies such as ClearScore and etc. Actually, Monzo did it as well. I'm not a Monzo. I don't know. I'm not a Monzo fan page, by the way. I am, yes, I am neutral. But I've seen like examples around open banking, so providing my mortgage details and my credit card to get better rates, and I have been able to get better rates, and it's something that they're seeing more as more and more increasing. I think there's still a bit of education around to do with the UK consumers around giving your data, because people think of surveillance or government surveillance and etc. So I think the industry as a whole needs to maybe teach customers that, okay, if you give us your data, we can help you improve your financial management. For example, it's not just give us your data, it's why. And this is where it comes in with the UX, like making sure that your copy is more conversational, that you're explaining to customers, making sure that your terms and conditions are in plain language so they understand what you are trying to achieve, and they understand that you're actually trying to help them. Of course, you're trying to help yourself, but you also want to put them in a better financial position. So that's where I guess the industry could go towards.
Super, thank you. And just staying on this topic for a brief moment longer, Simon, if I could return to you, are there any lessons that we can learn from the adoption or rollout of super apps in other regions, and what UK as a nation, what financial services firms themselves can learn from that?
Yeah, I think there's maybe consolidating a couple of points across Talani and Thomas there is that having all, businesses are able to access more consumer data than ever before. And mostly providers, whether it's a kind of like infrastructure provider like a Stripe or an AWS, or whether it's more point solutions that are looking at, credit assessment and that type of thing. It's great having all that data, but if you don't use it in a helpful way, then what you get is the kind of insights that Monzo promises in particular example Talani gave, but it doesn't really have the impact that it might. And I don't know whether that points towards an opportunity for, like a singular winner that is able to have the biggest data pool and therefore have a greater ability to manipulate and give data, better insights, or for that matter, point solutions that are very good at what they do and say, hey, well, this is the insight we give you on your spending in this particular environment. We don't offer crypto derivatives trading because you don't want that from us. Our value to you as a customer is specifically in giving AI insights onto your savings. And that is exactly what we do. And I think an underlying kind of piece we haven't touched on so much, but it's that of trust and reliability. And whether this actually gives an opportunity to larger, more traditional incumbents, where for all of the growth of the neobanks across the UK, so we're thinking Starling, Monzo, Revolut, but also Alaka and Tandem, and there's really like interesting niche players that particularly in kind of the last 18 months of higher interest rates have posted great growth, and I think that is healthy for the market to challenge those big four. Mostly UK consumers still get their salaries paid into one of the larger banks, statistically. And so is there an opportunity for those providers, if they can escape that kind of tech debt and the legacy infrastructure, to say, well, actually, we already have that trust. So what are we going to do with it? Like, how do we add more value over and above the status quo for people that have been banking with us for a longer period of time? And unfortunately, trust and reliability go hand in hand. So having the trust is one thing, and it's very hard to get, but it's very easy to lose. There's been a number of incidents and outages over the last couple of months, and certainly over the last few years, where banks are not able to pay out on payday, and businesses are not able to get through to and communicate with account management, and these things are really, really hard to recover from. It's something that a lot of effort has to go in upfront to potentially, from a business perspective, you don't see that reward immediately. Your NPS score may go up or down by a few points. Is that going to kind of move the dial? But it's something that, as a vendor to some of these providers that have a huge responsibility to their customers, it's something that we take very, very seriously at Stripe. We have a 5.9 uptime for the last 99.999% over the last 5 years. We publish it 24/7, and it means that businesses are able to kind of forget about that piece and focus on the services they deliver. Things like the Black Friday kind of sales, and when people are bringing money into their banking environment to then spend on kind of goods, that has to work. It's an absolute no-brainer. And so, I think that trade-off between new innovation, how we deal with the data, versus we have the kind of the pot of money, and we have the trust and reliability. I don't know quite how that's going to pan out, but on the merchant side, Tomasz, who's going to win is maybe the question I'll put to you.
I think whoever makes the customers trust themselves, right? So I think Sam, as you have mentioned, trust is a big factor, right? And going back to the discussion we had about payments and payouts and then super apps, it is very unlikely that merchants or banks or neobanks or fintech incubators are doing that all by themselves, right? It's very likely that they're using a network of partnerships, right? They're using company A to do payments, they're using company B to offer insurance, they're using company C to offer loyalty and rewards, for example. And what becomes very important is, first of all, be transparent to the customers. Who are you dealing with right now? Who is the actual service provider? Because it might not be TradeU giving you that particular value. It might be somebody else. And giving them clear indication that this is the people, or these are the people we are working with, it does build trust, right? So being very transparent. But also building that network of partnerships also helps us build that resilience, Sam, that you've mentioned about, right? So if one provider goes down, well, we need to have a mechanism to be able to switch over to the second provider who will provide that instantaneous pay and payout experience, or whatever other experience we're looking for right now. And I think the key to success is be able to build that network of partnerships, build that trust, which is especially important for neobanks, for those who are new on the market, because HSBCs or Lloyds or Barclays, they already do have that trust, right? And no matter what they do, they will never lose that trust as quickly as neobanks would, right? So making sure that we can tell to the customers in a proper way what services you're getting from us, what are the risks involved with those services, who are the parties in control of your data, who are the parties responsible for the customer services, why we are giving that to you. I think the more we put focus on that transparency and on making sure that the service we provide are reliable and personalized, as we've mentioned before, I think that these companies will be able to succeed in the market quicker than others.
Yeah, so Lani, if I just really quickly come to you, because you mentioned trust earlier, reliability. Is that something that you found comes into that kind of trust equation that users have?
Yes, Gen Z millennials are not new to abandoning companies. Of course, they have a level of grace, but reliability is very important, and transparency, particularly around if you do mess up, they want you to own it, tell them what happened, what you're doing to work on it. All the hidden stuff is not going to work with them. So again, that comes under the understanding your customers, the why, making sure that you're communicating to them in a language they understand, and that you are transparent with them.
Perfect. Sam, sorry, I think you were about to say something as I really loudly spoke over you.
No, it's okay. I think it's a phrase that a phrase that's common across the industry, and we use it in a particular way, but is around embedded finance. So what is it that's being embedded in your particular suite of tools that you don't necessarily own, that you're licensed for or provide yourselves, but you want to bundle up in a way that delivers value to your end customers? And because that is so broad, it means that it can be utilized and implemented in lots of different ways. So from a Stripe perspective, for example, we have Stripe Connect, which is what powers huge numbers of financial services, but platforms and marketplaces. For want of a better way of describing it, it's like PayFac as a service. You enable that platform in question, the business, to offer payment services to their customers. And it's a good example of what that embedded finance kind of piece can do. Off the back of that, you can then start lending money. You can offer software services for invoicing and that type of thing. So it's really, really flexible. And I think that when we talk about the evolution of financial services to consumers, embedded providers are going to be increasingly important in the licensing required to be able to deliver a service yourself is correctly very rigorous, very hard to come by, and typically takes a fair while. So there's a build versus buy equation here, is to say, well, if we want to offer crypto trading and crypto purchases to our customers within the app, do we go through that ourselves? Do we look to a micro license in Europe? Or Kraken, for example, have an embedded functionality now such that we can bundle that up into our proposition. If we're a savings app, do we want to look at stocks and investments, in which case we partner with, say, an Upvest, which is an infrastructure provider that sits beneath that customer-facing experience and powers the financial services apps to offer more experiences to its customers. And there's a whole host of other examples across payments, investments, crypto. And I mean, ignoring really the kind of fundamental layer is banking as a service providers, which, we look at your modulars, we look at 10x. Starling is a fantastic standalone bank in its own right, and they have Starling Engine to enable other businesses to open and operate as a bank. And these plays are really, really interesting in terms of, do you grow by adopting many of them quickly and then look to spin out and go direct yourself in the future? Do you compromise and say, hey, we were able to invest and build this ourselves, but we're going to go to a fringe solution here? And I think this is a real opportunity for businesses that are close to their customers to say, actually, we do understand what they want, so we can pick and choose from these embedded providers, because we know that the next proposition that's going to add the most value, and that will be different for every provider.
Super. I think what you just described there as well, Sam, is the richness of the fintech ecosystem as well. A lot of those company names that you mentioned, Innovate Finance members, and really contributing towards that rich tapestry. With just over 15 minutes remaining, I want to just once again encourage you who are watching, whether you're eating a sandwich or making copious notes as you're watching this webinar, please do suggest the questions, chat box at the bottom. You can pop it in there, and we'll get to as many of those as we possibly can. Given the topic of this webinar is future trends, if I might touch on stablecoins next. Those who were at the IFGS summit, Mansion House, Guildhall, may have seen the Chancellor announce a bunch of different kind of policy things in this area. And stablecoins in particular offer speed and cost efficiency, particularly with cross-border payments. In terms of that kind of regulatory landscape, Sam, if I might stay with you, what, in your view, needs to happen before there's mainstream adoption, and how can businesses that you work with help prepare themselves for that potential shift?
Yeah, sure. I mean, that's a big question. And again, one that there isn't a definitive right answer. What I'd say, though, is that specifically crypto has had a bit of an identity crisis over the last few years in whether it is for or against regulation. Are they decentralized and that works the way we operate, or do we fit into a sort of TradFi and kind of more traditional payments and financial ecosystem? The stablecoin play is something of a bridge. I think it's a step towards being a more regulated service. Do you define it as a service or a product in the way that it's utilized? My take, and certainly Stripe's take, is very for regulation. We want to work with bodies that protect consumers and businesses alike, and give that level of protection that in terms of the topic we've discussed, gives people the opportunity to forget about it, to say, well, we trust what's happening here, such that we just use the services versus worry about our money or question the providers that are giving us these services. I think the stablecoin one is valuable, particularly for cross-border money flows. I wonder whether in domestic instances it is as applicable in the kind of short-term future. A better example of kind of keeping that UK lens is the slow burn of open banking. This is something that's been in motion for 5 years. Probably, I've chucked that number out there, but someone from one of the great providers will correct me. But VRP, variable recurring payments, still in motion. That's been sort of promised every year without really being a replacement to direct debits. So it's a good example of the top-down edict of regulating open banking such that banks open up their services with APIs is a great thing, but its ability to then implement is probably slower because of the direction of travel. Stable coins, on the other hand, have kind of grown in an unregulated environment in terms of crypto, and their adoption has been absolutely crazy. So there's no kind of great secret in that Stripe acquired a stablecoin infrastructure provider called Bridge at the end of last year. We just launched a suite of products that are very stablecoin focused, such that businesses can hold USDC, digital dollars as a financial account. And we think that's going to be very valuable moving forward, but we want to operate within an environment such that everybody knows what they're doing. And I think, there's a lot of layers to that. But as a business, as a merchant, it comes back to the kind of starting point of this is that payments historically were seen as a commodity. You went to your gateway acquirer, you got it as cheaply as possible, or you did so directly with the bank, and that's fine. Actually, the complexity is such that getting payments and money movement right is a meaningful differentiator to your customer's experience and therefore to your bottom line of the business. So even if you don't have a dedicated payments team, it is worth looking at what is the status quo today. Are we operating efficiently? And are we ahead of changes in that kind of next 6, 12, 24-month horizon?
Yeah, I see the subtle nod to Bridge in your background as well. That
Very good. Yeah.
On stablecoins, I think just that role in financial market infrastructure is really important. One member of ours does SME banking. You might be able to guess who it is, but I won't name them. Said at a recent roundtable with an MP, we've got no skin in the game, but you need to be interested in this. This is the future infrastructure. And I found that really fascinating. Thomas, if I could come to you, from your point of view, are you giving any thought to stablecoins in terms of payments and how that might affect your firm in the future?
Absolutely. I think, as Sam mentioned, stablecoins are the great bridge between the current ecosystem of payments and what the future is, right? Right now, a lot of companies are relying on the good old SWIFT, which takes ages to be processed and costs millions of pounds every single year to be maintained. Stablecoins offers a very nice alternative for those payments to reach the destination quickly and much cheaper. I think right now, stablecoins is still on the rise, and it's difficult to say that in the next 5 years, there will be no SWIFT and only all payments will be going through stablecoins, right? And it might never happen. And I think the way I look at stablecoins is that it is a very good alternative that fuels innovation and that fuels the value that you're delivering to the customers. And again, it does boil down to the trust element, and it does boil down to the transparency. If we're going to use stablecoins in the future to support payments and transactions, let's be transparent about it, because there might be customers who just don't want to touch it because they deem that to be too risky, and they would prefer to wait 5 days for the payment to arrive, but be safer, whatever that safety means. But nonetheless, stablecoins definitely do define the future and do present the rails for us to follow, observe, and when the time gets right, definitely get into that and support the flows and support customer experience by all means.
Super. And Talani, in the work that you've undertaken, have any issues which might be addressed by stablecoin or a stablecoin come up in any of the discussions that you've had?
So we haven't done direct work with stablecoins. I know Ciklum have a project with TradeU, which I'm not involved in, but more from a user experience perspective, I want to touch on around consumer protection. And as Thomas mentioned, the risk. So I believe there are different types of customers, and I'm thinking of the general public. So for it to become normalized, the regulatory landscape needs to be finalized, because if we look at Coinbase and if we look at what happened with Binance, that 1 minute you're allowed to top up your wallet with your via your bank account, then next minute you're not allowed to withdraw the money. You'll see notifications, not giving notifications in advance is the moment you want to pay out that you realize you're not actually allowed to draw this money. So where does this money now go? So I think there needs to be the regulatory aspect for consumers to be more comfortable with using these methods. I think stable coins I think it may be less risky, but it's associated with crypto. Like sometimes customers don't know the difference. I can give an example. Like sometimes in user research, I ask people, how did you pay? They say card. And I'll say, did you enter your debit card details or did you use Apple Pay? They say Apple Pay. So they may not actually know the difference between those. So I think it's around the transparency, communication, and consumer protection. Once that is done, then from a user experience perspective, I think it may be more adopted. But until those are like handled, I don't see it being widespread adopted. Of course, you have the believers, the early adopters, they're crazy about it. They will find a way. But in terms of like general public, I'm not sure yet. So that's
in terms of that almost like kind of education piece, we've seen that with parliamentarians in trying to separate treating crypto as a stock, speculating on its value compared to it as a currency and payment provider. So yeah, absolutely agree with that. We have had one question. Fantastic, praise. I haven't read it yet, so I'm going to read it out. Hopefully there's nothing really bad in there. As the tokenization economy gains momentum, transforming how assets, identities, even reputations are represented and exchanged digitally, what key trends are you seeing emerge across your global merchant and platform base? And in this shift, do you envision Stripe's infrastructure and initiatives like Trade.io supporting developers and businesses in participating securely at scale in this evolving ecosystem, which kind of speaks to the answers that you've given so far? Anybody like to tackle or elaborate more on that?
I can give it a crack there first. I think it's a great question. There's a few layers to it in that operating at scale is almost one of those almost a prerequisite in that if you're offering a fintech experience, largely a consumer one, or if you're a PSP to businesses, if you're not at scale, then it's not an effective business model. So Stripe processed $1.4 trillion last year. It's roughly between 1% and 2% of the global GDP. So being reliable at that scale is a core tenet of what we do, and it's why businesses use our services. And I think tokenization is one of the kind of tools. It can mean lots of different things in terms of card tokens versus like the tokenization of other data points. And again, it has a kind of crypto consequences and meaning too. But essentially that encryption of data such that one party can utilize it without being exposed to the compliance and maintaining it, that is a very valuable thing that Stripe does provide to its customers. And it's really important to the way a business operates. You want to be able to process funds from your consumers, but you don't necessarily want the highest tier of PCI compliance for your card processing. And actually, if you had to maintain that as a prerequisite, then it would be such a business blocker that you wouldn't be able to grow and execute and do the things that you want to for your customers. That is exactly the role that providers like Stripe can step into, where we offer a reliable service to maintain your compliance on your behalf. And it feeds back to that kind of embedded financial services piece around the kind of one of the key values that all of these businesses should have to their customers is trust. It's like, can you deliver the service in a way that it means that they don't have to build it themselves? It's better than building it themselves.
Fantastic. Does anyone else have a view on tokenization in particular? Thomas?
I think I'll just add a couple of points, probably highlighting what Sam you've already said. Tokenization is a great, again, bridge between this top tier PCI DSS compliance and storing data and being somewhere else. And I think utilizing tokenized information, being a card details, being personal information, be it whatever else we want to tokenize, is something that will be of growing importance and of growing usage across the businesses, because this will also help us scale and help us serve more customers quicker, better, more effectively, more efficiently, also bridging that gap of trust and bridging that gap of reliability as well, making sure that we don't expose, let's say, too much sensitive data outside, but instead we deal with tokens and we deal with encrypted information to provide that security and that sense of, yes, I can trust you, Trade.io, and you're doing a great job in protecting myself and my data.
Fantastic.
I think maybe just supporting Thomas's point and to yours as well, Talani, the best technology is when people utilize it without realizing they are. Like Apple Pay, I still think to me is the gold standard of a payment experience. It's so fast, it's and it's secure and it's everything. And stable coins, whether you look at tokenization, in that consumers can't tell you what interchange is. They don't need to know what interchange is when they use their card. If they've got a trader account and they're spending the rest of their balance on the trader issued card, that just isn't really what their priority is. They're coming to providers to invest in stocks, and they don't need the level of detail. That's exactly why we have all the infrastructure regulation providers around it. And the best technology is the ones that kind of can fit seamlessly into that customer experience in a way that they don't even have to think about it. And a lot of the new things we've discussed here, whether it's the kind of like bleeding edge of open banking with VRP and AIS services, whether it's things like stable coins and in the future kind of more crypto decentralized offerings, that gold standard is such that people don't have to get it to use it. They're not quite there yet, but that'll be interesting in the future.
There's a chap at Revolut called Adam Gagan who I'm going to shamelessly steal one of his quotes on this, but people don't want the loan, they want the car. They don't want the mortgage, they want the house. They don't want the payment, they want the coffee. And kind of that utility usually bears out. With just 4 minutes remaining, what I'm going to do is go around the panel and ask if you have a key takeaway or prediction that we can leave our audience with today. So Talani, can I start with you if that's okay? What's your key prediction or takeaway for the audience?
I'll have one of each. So the key takeaway is understand the why by speaking to your customers. Just want to draw that, speak to your customers. Of course, I'll say that as a researcher. And then the key trend is what Sam has mentioned, is embedded finance, whether that be through the open banking, through providing insurance, providing different types of services. That's something we are seeing more of, and I think we'll continue to see more of, because that's the only way to deliver that frictionless experience.
Fantastic. Speak to your customers, embedded finance. Thomas, if I can come to you, do you have a key takeaway for our audience today or a trend that you'd like to highlight?
Both as well as Talani did. I think, first of all, understand your customers. You can speak with them, you can live their life, but understand your customers. And then provide hyper-personalized services so that customers can actually feel at home and they can use your product with full trust, full transparency, and full loyalty.
Fantastic. And Sam, finally, if I can end with you, do you have a key trend, a key takeaway from Stripe's perspective?
Yeah, sure. Pressure's on. Been great insights already. I think my key takeaway would be, as a business in the industry, look at your financial tech stack. It's worth a revisit. There's such innovation in the space, whether that's coming from Stripe from a selfish perspective or kind of great competition out there. Getting it right can have a meaningful impact on the way that you're on kind of trajectory of the business. So yeah, revisit that tech stack, see if it's operating as efficiently as it can do. My key prediction, I think the rise of great embedded financial solutions that can kind of support financial services customers breeds competition. I think incumbents are going to have to be more innovative, offer more services in their apps. I think fintechs are going to become even more established and offer increasing services within that, and that's going to make for better opportunities as a consumer. And I think competition is a good thing. That's the future of travel.
Real. I mean, I'm subscribed to that, and thanks genuinely. Like, I love this sort of stuff. It's crystal ball gazing. It's what the future's going to be like, and it's what fintech's really good at. Thank you, Sam, Talani, and Thomas, for sharing those insights with us today. And thanks to Neve for organising this webinar, and to all of you who are watching at home or in the office for joining us today. If you want to know more about us, hopefully you already know about us, but if you do need to know more, hit innovatefinance.com. And we have lots of work that we do for members, including a whole event section of our website dedicated to the webinars, events, conferences that we're hosting in 2025. Once again, thank you to you. Thank you to our guests, and have a great afternoon. See you later.
Thank you, everyone. Bye.
Thank you.
Thanks, guys.